It is another Friday, which means you know it's coming. Another episode of Fun Friday. An incredible guest, a friend, a partner, and a great guy, a father, the pride of Omaha, some
There we
would
go.
say. But please welcome Jake Prieur, head of marketing and operations at Skyline Point Capital. Did I get your title
You
correct? It's
got it
very
right,
important.
man. You even got the last name correct.
Yeah.
That French Canadian last name gets people sometimes, but yeah, man, happy to be here. Thanks for having me.
Yeah, well, thank you for being on. And, we've been able to get to know each other, I think actually now about a year.
Mm-hmm.
So I want to say that we were sending out the 3 property portfolio. I believe it kind of piqued you and Steve Nabidy's interest, who Steve
Mm-hmm.
is your partner, of course.
Yeah.
And you got interested. We had a conversation. It was actually literally legitimately a year ago because I was in office for New York for our conference then, which you just
Yeah.
attended. So it's so fun to have these conversations now a year later where we're doing this and we've partnered now on multiple deals. So how fun is that?
Yeah. Yeah. It comes full circle. And it was even before that we've known about and heard about you and your team and at Lone Star Capital and Rob and Kent for a number of years. And so it was only, again, like you said, a year ago where we finally got connected. And yeah, it came from, that 3 pack that you sent out. But yeah, I mean, like I've got Rob's book here. Like this is how we got started, like trying to continue to better ourselves and learn more so we can, serve our investors better. But, you read books like that and you're like, and this team knows what they're talking about. And they seem like upstanding people and really competent. So would love to connect. And yeah, so about a year ago that I think we met at Race Fest, Hunter Thompson. And yeah, now finally in a couple of deals partnered with you guys.
Yeah, no, it's very exciting. It's very rewarding on my end, frankly, too, to go through a full cycle and stuff with partners that weren't, with us before that now
Yeah.
they're, you guys are gonna be a staple with us moving forward. That's obviously not all my doing. It's really just a
Yeah.
testament to the team, of course. I don't want to make it sound like that was me, like I met you somehow from a random background or a family connection, but it's
Yeah.
really cool that it all comes full circle, that the team is growing and you guys are where you're at right now in this market cycle, which is a point of power, which we're going to get to. But before
Yep.
we get to, the background and things of that nature, or I guess what we're doing currently, let's just learn more about yourself, your
Mm-hmm.
story, how you got here. You have a very cool and unique perspective from, your origins. So let's kind of share your story here.
Yeah. So I've always been around real estate. As a kid, my stepdad and my mom owned apartments in California. So I was the little kid tagging along with my dad to collect rent, to fix the apartments, to do tours, to get new tenants into the apartments. And so always been around them, but actually didn't get into investing myself until mid 30s. The 20s were trying to cut my teeth and to learn. So I was at a Fortune 100 company, transportation, doing marketing and sales. Moved into a head of marketing for a financial advisor, and then over to an executive vice president role for operations for a startup. Before I launched my own marketing agency. So my background is in marketing and operations, and so launched a content marketing agency and a video production agency, and ran and scaled those for a handful of years. Eventually sold it to my partner, and then I've always known I wanted to get back into real estate, and so I reached out to Steve Nabity and his family and said, "Hey, here's what I'm doing. Would love to come alongside you guys if the opportunity exists." And serendipitously, they were looking for someone like me to really head up marketing, head up client relations and operations, and to help Steve out. And I was looking for somebody like Steve and the family to learn a bit more about real estate and get into the game, and just great partnership right off the bat. And so we're coming up on here on about 2.5 years of partnership, and like you said, it's been a great start to my journey. And even partnering with you guys, we've had some great opportunities to bring some deals to our investors that they've absolutely loved.
Right. Well, let's talk about, the early years, which is when your family was in the apartment world and whatnot.
Mhm.
Did they teach you any principles, maybe directly, indirectly, or kind of, program you to learn about what they were doing at that age?
I don't know if I had the wherewithal to know what was going on at that point. I was young enough where I understood like what this was. I didn't quite understand how they approached it or why they approached it the way they did. But there, I did learn a lot of like just the skill set of how to treat people, how to walk people through a property, how to sell them on something, but then also the skills of how do you repair an apartment, like what actually goes into turning an apartment after a resident leaves. And so there were some of those things that were, I guess you can say, ingrained in me from a very early age, but there were a lot of the things that you don't just proactively say like, oh, I learned that thing. It's like now it's sort of in me. And now when we're going through a property and touring it, I already have that eye for what are we looking for here? What's a red flag or what looks good? So I don't know if there was any proactive thing my family was teaching me through those early years, but it definitely seeped in through osmosis, if you will, and is helpful today.
Yeah, well, I can kind of relate that to my background because my dad's been in the financial advising world. And he did always kind of just preach to us some very, very good and logical principles, quite frankly,
Mm-hmm.
pertaining to how you have to look at money, you have to think about stuff. I probably have less of an allocation in that side of the world than I do in real estate, which,
Yeah.
is another conversation that my dad and I go back and forth on. But, I'm more just of a real estate guy to find that predictable cash flow perspective. That's how I view the world, at least. But
Yeah.
there's no right or wrong.
I totally can relate to that. Like I know my parents they did not have a great experience owning their own apartments, but they owned a handful of units in a not great area of Bakersfield, California, which is a great town, but just not a great experience for them. And so my my assumption was they never pushed the benefits of investing in real estate because they were doing it all themselves. I mean, the midnight calls, the repairs was all done by them, and they eventually exited from their units, and I think they broke even. But boy, did they lose a lot of sleep over that experience. And for me now looking back, it's like, yeah, I can totally relate to that, understand it, because you're not passive in this. Like you are actively involved in managing these apartments, and I think that's one of the benefits of what you and I do is that we get to allow people to have the benefit of investing in apartments, but not having to be active in it. You can just sit back and run your business, or you can go to your W-2 job and know that we're doing it on your behalf. And so my parents definitely did not tout the benefits of investing in apartments because I don't think they had the best impression of it early on.
Yeah, which is kind of an interesting thought to think about here, which is there's real estate is broad. There is
Mm-hmm.
investing in it, there is owning it, there is operating it and
Yeah.
managing it.
Yeah.
And frankly, we've talked about this before. It's kind of a joking conversation, but I have no interest to operate real estate. If I had to operate real estate, I'd probably still be selling real estate, if that makes sense.
Yeah.
I'm not interested in that. I'm trying to get to the investor side of things
Yep.
and grow relationships and whatnot. So I respect anyone who has the acumen and the want to kind of do the project side of thing, the hand holding and the hiring and firing there. There's all sorts of opportunities that kind of happen or things that come up that are stressful on my end inherently, but you deal with it.
Mm-hmm.
There's a lot
Yeah.
of fun to it as well. There's partnerships, there's negotiations and stuff. There's a lot of back end there, but from an investing perspective, it's great that you still had the want to do it because some people have a negative experience or see the pain that maybe their parents go through and kind of avoid that trauma, so to speak.
Yeah.
But you naturally saw the benefit and the value of it
Yeah.
without being scared to do it.
Yeah, I think for me it was. I mean, you'll hear this I imagine all the time, but for me it was like reading Rich Dad Poor Dad and a few
Best
other like
book.
conversations that said, oh, okay, I can see now why that experience my parents had wasn't great because they were the owner operator, and even my dad would tell you this that he's like I'm a contractor. I didn't really know like I wasn't a business owner. I didn't really kind of get that side of things, and so reading that book sort of flipped the script for me to say maybe there's more here that I actually need to think about and learn about before I make any assumptions that investing in real estate is a bad investment. When years later I'm like, wow, I wish I would have known this earlier because it's actually a fantastic investment if you do it right, if you partner with the right people, and are educated enough to learn about it.
Yeah, and it's all about, finding the people that love to do what they're doing. There are some
Mm-hmm.
people out there that love to clean up a mess, that they love to go the
Yeah.
full start cycle, this, that. I'm someone who does not really love to do that. I like seeing the before and after pictures,
Yeah.
but I don't really like the day to day. I want to put the
Yeah.
capital in. I want to put the capital together, structure the capital stack, have the relationships, do the wining and dining of our prospective
Yeah.
clients. That's what I like to do. Okay.
Yeah.
I'll just be very transparent.
Yeah, I'm kind of a mix. Steve and I are both builders by nature. We love building businesses, building just things in general. And so the idea of buying apartments or buying real estate and then putting together a business plan to make it work and to make it make sense and then executing it is like music to my ears.
It's stimulating.
And it's stimulating, yeah,
yeah.
and for Steve as well. But I'm like you in the sense too that it's like I love the conversations like this. I love engaging with our investors and educating them and helping them find the right investment that fits what them and their family actually need. So I'm sort of this weird hybrid of I love the day-to-day upkeep, but I also love the relationship of being able to work with our investors.
So what I hear is that you love people, but you also love systems and operating and
Oh my
putting,
gosh.
structuring stuff together is what it sounds like. And that's really what marketing it is. It's take an idea, put systems behind it, put a little flair and panache to it, and you can market your product or your agency, right?
Yep.
Yeah.
My wife, if you could see some of the spreadsheets and formulas I write on our spreadsheets for operations and finances, some people go cross-eyed. I know my wife does when we have to go through our finances. So yes, you nailed it on the head.
Only has to make sense to you, right? And I guess obviously conveying it to your wife, saying, no, sweetheart, this is in the right hands, and here's why. So that's awesome. But let's talk about your first real estate investment. Was it a house, or was it, you said in your mid-30s is when you got into the investing world of stuff. How did that story unfold?
Yeah, so the very first investment was my own personal residence. So bought it in 2013. So that would have put me at 28, I think, or somewhere around that age.
Was that in Omaha or California?
That was in Omaha, Nebraska. Very cool. Got a great deal on it, towards 60 houses before I landed on this one. Great neighborhood, and just caught it before the wave of people tried to move into this neighborhood. And so it's appreciated fairly well over the past 11 years. But was fortunate to be single and to have a lot of rooms in the house. And so I just moved in a lot of my friends, and they all got cheap rent, and I got rent free for 4 or 5 years and able to pay it down quicker. And then, once I did that, I realized, there's something here to this of being able to own real estate and have it appreciate, but also have, other people pay down the mortgage. And it took a few years to kind of translate that into further action. But my first investment after that was in a 300 plus unit apartment in Dallas. That was one of the ones that Skyline Point Capital brought to the market and to our investors, and it was a no-brainer for me. It was just a great opportunity. We got a great price at it, and I was sold, and it's performing incredibly well. I think we are 2 years ahead of schedule on pro forma rents, and so we're super happy about it already.
And that's kind of the value of investing in, growth markets, Houston, Dallas, and Austin.
Yep.
Let's just take the supply conversation out of it. If you do buy well, the markets are going to carry. You just kind of got to do your day-to-day work and, trust the process. Trust that, hey, if you're, in sales, if you make the calls, you're going to get a deal done. If you're in the market and you do your work and you buy with good fundamentals, the market and the work and effort should take care of itself in doing the right thing. So it's awesome to hear you've had that experience.
Yeah. If you buy right, and if you, if you put together the right business plan for it and give the right team around it and the right debt, to your point, it's going to be hard for you to not do pretty well in these things. Now to get all those, components in the right order and correctly can sometimes be difficult, but if you get those sort of fundamentals nailed down, you usually do pretty well in real estate.
Yeah, and that's kind of funny. It's something that we think about too, because we are kind of going through and overhauling, transparently speaking, our management systems and processes. That's what Rob's full focus is on right now, which is awesome, which means if Rob's focused on it, it's going to work out better than it was before. I can assure everyone there. What he focuses on will work. He's just that determined. That person, he's living in Houston right now, as many people know. probably not for much longer, but to kind of really just have a PhD and a master's degree, if you sorts, in that side of the business.
Yeah.
But I think one thing that we've done incredibly well at Lone Star Capital, maybe the thing that we're best at today, is we're really money, I believe, on the acquisition side of things,
Mm-hmm.
buying deals correctly. And that's very crucial.
Yeah.
It's easier to probably fix management stuff than it is to fix a bad basis, because bad
Yeah.
basis is permanent. Who you have managing it and personality of kind of coming in and out can, to a certain extent, be a revolving door. You hope it's not. You want some
Yeah.
continuity there naturally. And that's with a lot of deals we've acquired. We've actually retained a lot of the staff and on-site people there to make sure that, the level of diligence is still there. People know the property, they care about the property, and they know the tenant base. All those things are really crucial in order to, have a successful takeover, which takeover is the risk factor to any really
Mm-hmm.
acquisition. That, and, of course, taking out the right debt. But if you get those pieces in place, retain
Yep.
some continuity, buy it well,
Mm-hmm.
and manage it, that's just the recipe to make money in this business and have, really great returns through any market cycle.
Yeah, I completely agree. I mean, I think you guys have a real skill set in buying right, getting the debt in place, and I I'm personally invested in Cortland Med Center. Just full disclosure, and
Likewise.
yeah, and which I'm super excited about. And when I heard Rob was moving to Houston, I loved the move. I mean, I thought it was an excellent move as a leader. I thought it was an excellent move on a team focusing on asset management and really honing in on the skill set of managing these assets well. Because you guys do an incredible job of buying right, and so managing right being the next frontier, which you guys had already done a great job. But man, when I heard that, I slept even better at night knowing that Rob was down there, because, like you said, when Rob and the team focus on something, it's going to get done really well. And so I know that gave Steve and I even more comfort knowing that, okay, there's a plan here. There's Rob's moving from New York, which he's been there for a long time, and now moving to Houston. This is gonna be really beneficial for all assets, but including the ones that Steve and I are invested in personally.
Yeah, most definitely. And we really do care about that. Making sure that everyone feels good, can sleep well at night is
Mm-hmm.
our new mantra. Smart things
Yeah.
to smart people, and people sleeping well at night is kind of how we live by it. And naturally, too, with me being, a massive part of my dollars that I've ever invested that I have to my
Mm-hmm.
name as a 30-year-old is directly tied to Lone Star. So
Yeah.
I, too, felt really great
Yeah.
when he wanted to take it upon himself to do that, because no one asked him to do it. No one made him do it. But he did
Yeah.
it because he knew it was right. And that's kind of the beautiful thing about the leadership that we have here at Lone Star Capital. But
Yeah.
on the next topic, it's not all you do with raising with us. Naturally, we would love to be selfish and work with you guys in every single
Yeah.
deal, but you do deals outside of us, and you actually have amazing offerings yourself. It's kind of funny. When we were at the conference, it was one of the funniest moments, I would say, because our friend JC Clemens was at the event, and he's like, "Oh
Uh,
yeah, I think Jake and maybe you were talking about, oh, I'm from Omaha." And then JC go, I'm buying a deal in Omaha. And then you guys knew exactly what the
oh
deal
yeah.
was. And you guys, oh, we just missed out on that. You guys bought it. Oh my
Yeah.
God. It was just such a
Yeah.
funny moment. So you guys do more than Lone Star, long story
Yeah.
long here. So what does Skyline Point Capital do outside of, giving us the honor of working with us?
Yeah, it's so funny running into JC and knowing, oh, this is the team that just barely beat us out for a property in our own backyard. But outside of partnering with you guys, and we really focus on the Midwest. I mean, we're located in Omaha, Nebraska. We feel like this is a hidden gem for the most part. I mean, it's like every other market. You really have to know it well to do well in it. Like you guys in Texas, no one's better. For us, we just know that there is an immense amount of opportunity here in Omaha and Des Moines, Kansas City, and the markets around those areas. That if you know them well, you can buy them right, and you can find some really good investments for your investors. And so we focus most of our attention on multifamily in the Midwest. If we're bringing a deal to the market ourselves as lead GPs, it's going to be multifamily in the Midwest, and we'll do some retail and industrial if it makes sense. If it's a deal that fits the criteria our investors are looking for, then we'll consider it as well. But I'd say most of the time it's going to be multifamily here in our backyard.
And then do you ever do any retail or other asset classes like that? Are you pretty agnostic or
Yeah,
just
so we'll do retail and industrial in the Omaha area, or if there's some in Des Moines and Kansas City that we know the area well enough to know that this would be a good investment. But Omaha, it's going to be multifamily 80+% of the time, and then the rest of it will be some retail. or industrial here. Again, just in our backyard.
Yeah, so I have not had anyone on this medium that has gone into kind of length about why that area, why you love Omaha so much. I
Yeah,
mean, you are very familiar with it, so you are the expert. It is, usually a very sound idea, and it makes sense to invest in your backyard, so to speak. Not
yeah,
everyone can, though, from a fundamentals perspective. We can't buy real estate in New York to make it make sense, but it's awesome
yeah.
that you guys can. And Omaha there. But what about Omaha is so attractive? Why do you get excited about it? What are the fundamentals that, get you, ready to park your capital there and invest?
Yeah, yeah. So there's a couple reasons. One is that in no particular order, everybody's focusing on Texas, the Sun Belt, Arizona, and so just the amount of competition in the Midwest is lower by nature. So that's highly attractive, but it's also an area that people are starting to move. I think post COVID, people started to decide to move more inland, and so you've got people moving from California, Texas, the East Coast inward. And so you're starting to see more of an influx of people from out of state move into the Midwest. But you're also starting to see people who are from the Midwest actually want to stay in the Midwest. I can't remember what the numbers were, but there was an overabundance of people who were born in Omaha that wanted to get out of here as soon as they left college, and they never really came back. And so Omaha and Des Moines and Kansas City have spent a lot of time and money fostering a community where young people want to actually stay. I mean, it's always been a place where you want to raise your families, but now it's a place that people actually want to move to because it's vibrant. There's a lot going on. There's a lot of money being invested in these communities. And so naturally, jobs are being created in these areas. And so, you've got like Des Moines, who's one of I think the top, if not one of the top markets for financial services. So you've got a lot of like insurance companies there and whatnot. And here in Omaha, you've got Warren Buffett, you've got Union Pacific, you've got Kiewit, a lot of construction. And so people are wanting to move here. So you have an influx of people moving in. You have jobs being created. You have people not really focusing on it as far as an investment standpoint. So there's low competition. And people are making good money here. And so you're able to raise rents at a pretty steady rate. I think I haven't checked it recently, but as of last year, Omaha was in the top 5 to 10 in overall markets for rent growth for multifamily. And it's in a market where people aren't really building a lot of new assets. And so there's not a lot of new inventory coming online where you have to compete with. You have the Missouri River butting up against us here. And so you're kind of there's only so many places that you can build. And so if you're building something new, it's usually on the peripheral of Omaha. So if you can find some good deals on the central part of Omaha, then you're going to have some really good headwinds or tailwinds, excuse me, for buying here. So that's one of the reasons why we love Omaha so much, and we know it's a great investment, a great steady investment for our investors.
Yeah, and I think you hit something which is so crucial, which is the supply conversation. Any deal in any market has its pros and cons, but I think the biggest thing that's really evaporating gains right now, you could argue, outside if you have floating rate debt, which is inevitably going to cripple, your investment because your debt servicing is substantially higher from a payment perspective. So you've got that going on. So that's something to think about. The other thing to think about is, of course, insurance costs going higher, but supply is really going to erode your returns because
Yeah,
if you do have market growth, but there's so much supply coming online, your rent improvement and bumps are not going to happen. So it's something to think about there for sure. With that said, what are the other kind of variable costs that may or may not change on your end? Is in Omaha good for a natural disaster perspective? I mean, I would imagine there's tornadoes there perhaps, but that might really be
yeah,
about it, right? And cold
yeah.
weather, but that's probably built for.
Yeah, one of the great things, at least I love about Omaha, not only as an investor but also as a resident, is that we're very insulated from just about everything. I mean, natural disasters, market downturns. I mean, it takes a while for it for the wave to kind of move inward, and it sort of loses steam, or the impact is not as drastic. So, during I was living here through 2008, 2014, and those sort of downturns, and there was a recession going on. There was job losses, and we didn't really feel it that much in Omaha. when the past year where we start seeing grocery prices just skyrocket, it took us months before we really started to feel that those gas prices and grocery prices start to take an increase. So we have those sort of things going for us where we're insulated from the, where things happen first, which is the coast. And it's just a pretty steady Eddie lifestyle in Omaha. Like our cost of living haven't gone up drastically. The value of homes haven't been so exorbitant that people can't afford them. And so it really is a great place for investing.
So when you're buying units out there, what would you say the typical, acquisition, size is? What's like the going in cap rate roughly? And what would you say the vintage is?
Yeah,
On a normal standard deal that you would underwrite and kind of think about pursuing?
Yeah, no, it's a great question. So the vintages are going to be in the ones we've been seeing lately in Omaha are going to be the late 60s to maybe mid 90s. And so, like, for instance, we're underwriting one currently. It's the late 90s. It is, I'm trying to think off the top of my head. It is going in at about a 6 cap. You're not really ever seeing brand new assets coming, like something that was built in 2020 that's going up for sale, because again, not a lot of assets are being built fairly regularly. And so the ones that do come up are going to be in the 70s and 80s, and people who've owned it for a long time and just want to exit it and move their money elsewhere. But yeah, the one we're underwriting now is probably $85,000 a unit. So that puts us at about a 6 cap, and great asset, and one of the ones that we hope we can get across the finish line before the end of the year.
And would that be a value add opportunity in that respect?
A little bit. It's not significant value add. The game plan for this would just be put a few $1,000s in at turn and just spruce it up. But we're not doing anything that's we're putting $7,000-$10,000 per unit in to spruce it up. Now there are some of those deals where you've got a game plan of renovating all the units and getting $100-$200 bump on rents. But for this one in particular, it's hey, take it over, it's turnkey, and just keep the engine running, and it'll do pretty well.
Makes sense. Very cool. So I guess that brings the next question. How do you evaluate a sponsor you would want to work with, and how many sponsors have you guys worked with outside of doing your own deals, of course?
Yeah, that's a great question. And this is something I know that you and I and Steve and Rob talked about at length a couple of times, but it's really, who do you like and who do you trust and who do you want to be in the trenches with? Because, owning real estate it's a business. And so there's great days and there's terrible days, and there's things that go right and there's things that go wrong. And it's who do you want to be in the trenches with? And who can you trust is going to do the right thing and is going to be level-headed and is going to make the right decisions and do what's best for the investors and do what's best for the group as a whole. And that was one of the things that we felt very confident with you guys in moving forward with you, is that it was like, okay, well, when something goes bad, because it will, I mean, whether it's the market or whatever, these are guys we want to be in the trenches with because we know we can trust them and they're going to do the right thing. And so yeah, just people we love to do business with. We love, grabbing a beer with or grabbing a cup of coffee with, but also we know we can trust and they're going to do the right thing. It's been a huge sort of principle for us and who we partner with. And then to your other question, really we tend to focus most of our attention on our own deals. And so it's got to be a pretty darn good deal to bring to our investors or the right timing to partner with somebody else. But it's really you guys and one or two other operators who are very honed in on a specific market and know it really well and are craftsmen at their skill.
And I'd have to imagine, and very grateful that you and Steve feel comfortable with the team and I'd have to imagine that you probably work with sponsors that would give you access and deal flow to not where you're looking, probably, right?
Yeah.
Would that be a fair assessment? Because there's not really a point to double dip there. And there's not that much extra value that you're really bringing to other people because you could do it yourselves, right? In that Midwest area, you're probably underwriting, looking at every other deal anyways. So are you working with groups like us that are, hey, very niche specific in a couple of
Exactly.
markets essentially?
Yeah, if it's the Midwest, we'll do it ourselves, and we'll bring in people to partner with who bring some skill set or something to the deal that's going to make make the deal better. But if we're partnering with somebody, then it's usually for different locations. So for you guys in Texas, we've got another partners that we've done work with in Dallas and Nashville. They're experts in Nashville as well, and so outside of Omaha and in KC and Des Moines, then we'll tend to partner with people. Here, we'll do it ourselves.
Yeah, and then another thing to think about too is when you pitch to your investors are different than I would say a lot of people's because, Steve, family office guy, high
Mm-hmm.
net worth guy, done very well.
Mm-hmm.
You've done very well.
Mm-hmm.
I have to imagine your investors aren't really looking at the IRR, this, that. I feel like they're probably, and this is a hunch, and please correct me if I'm wrong, they're probably
Mm-hmm.
looking at the real estate deal as a more holistic investment, not just, hey, how can I thread the needle here and get an outsized return, but hey, does this deal make sense? It's something I'd be comfortable with holding long term. Is that fair?
Yeah.
How do your investors see the world?
Yeah, that's a great point. I would say because most of our investors are going to be, in their, I'd say mid 40s to mid 60s. They've succeeded at their profession. A lot of them are current or former business owners, and so because Steve, that's his background of owning businesses. That's my background of building and buying and selling businesses. We tend to attract those sorts of people, and so with that in mind. Most of our investors, if they own a business, are looking for the depreciation. They want that big tax break. If you're kind of in the 50s and 60s, a lot of them like the cash flow because it helps with their style of life. But they're, like you said, they're looking at the total package. Now, we have a few investors who have very specific needs, and so we'll find very specific deals to fit that need. We've got one comes to mind, and he said, "I don't really care about depreciation. I don't really care about appreciation. I want the cash flow." I'm like, okay, well, we can do that. And so speaking of retail, we have retail assets that do, mid, I'd say teens when it comes to cash flow, cash on cash returns. And so that's a perfect opportunity for him because it's retail. It's not going to appreciate a ton, but you're going to hold on to it for a long time. And so,
Yeah, you get a 5 or 10 year tenant in there, and
yeah,
it's very predictable cash flow. Very
exactly.
predictable.
Yeah. So most of them are business owners, I'd say, or have invested in businesses, and so they're looking for the total package, including the depreciation.
Right. Okay. Well, that's very interesting, and everyone's investors are slightly different. There's some younger
Mm-hmm.
people that we work with. Not saying that you're old, but people in their
Yeah,
20s or
I'm still in my 30s.
earlier 30s that are like, I just want to hit a grand slam. I'm
Yeah,
looking for the highest return. Don't really care about cash on cash. Maybe they're more interested in development because it's a big equity lift. I think we look for a blend at Lone Star, a mix between
yeah,
cash flow and appreciation. I think you can't have one without the other. I will say though that cash flow is really, I think, a great way to look at investing because it is more predictable. Appreciation is not. That's really subject to the debt
mm-hmm.
market and
Yep,
where cap rates are at that moment from the exit, which is very hard to simulate. What you
yeah,
can simulate, though, and what you can project is to a certain extent your increase in operating costs and then how your debt is and how, your cash flow going day one to year 3, year 4, whatever it may be, depending on, your numbers.
yep. No, 100% agree. I mean, I put myself in your bucket as well. Is that I'm not. I might be looking for doubles and triples, maybe not a home run, because home runs come with higher amounts of risk typically. Not like on our recent Cortland deals, but that's pretty low risk for a pretty home run return. But I'm looking for the wealth creation. That's my part of life, whereas other part of our investors are wealth preservation. They have it already, and they want to keep status quo, and so they're looking for sometimes just steady Eddie deals where it's doubles and triples and sometimes singles, but they're happy with that.
Yeah, without a doubt. Everyone's different. And, capital preservation and wealth creation are certainly different plays and will probably change over the course of your investing life and
Yeah.
career,
Mm-hmm.
without a doubt. So, out of curiosity, you were going to have a lot of options when you kind of wanted to get into the real estate world. Just to go back to, why, Steve and why that team there. How did that kind of come together? What made you comfortable, and what makes your partnership so unique and dynamic? Because it really is. It seems like you
Yeah.
guys, from the outside perspective, and I could be wrong, get along and see eye to
Oh
eye and
yeah.
everything, and are just very, very in sync. So can you maybe talk about that and shed some light to some people who might be looking to partner, or making that plunge in a sense, or maybe transitioning into real estate?
Yeah, no. So for me, it was super simple conversation. I'd known Steve and the Nabney family for over close to a decade. Steve and his wife Lynette played a prominent role in my wife and I early dating relationship. I mean, our second date was at Steve's Fourth of July barbecue, and so like they've just been pillars not only in the community but also throughout. Throughout our lives, and I'm close friends with their kids as well. So they've always been there, and so naturally, after selling my agency, I knew exactly who I was going to call to say, hey, I could use your prayer, I could use some guidance. I don't know what the future holds, but I feel like it's in real estate, and so he was a natural first point of contact. And again, serendipitously, the timing was perfect, and for he and I mean, we think very similarly. We are a very similar type of person in many ways, and so it creates for a very, very conducive and fun dynamic. We work really, really well together. But in the parts that we differ, that's where we really shine on our own fronts. And so, in what I mean by that is, I love getting in the nitty gritty of things. I love being granular. I love the details, and so I spend most of my time there. Steve's a vision caster. He's a visionary. He's an executive, like a C-suite executive, and so he's the guy who's casting vision. I'm the guy who is the integrator, who comes in and helps figure out, okay, how do we execute this vision? But again, we have the same sort of mindset coming from being business builders and having a desire to build and to grow wealth. We get along really well. It feels like we've been together partnership wise for a number of years, but it's only been a few years. But it's probably because we've known each other for over a decade.
Yeah, I mean, that's kind of in some respects different, but some respects similar to Rob and I,
Yeah,
where
yeah.
Rob knew me and we knew each other since 2017, 2018. Got very close in 2020, so we kind of knew what each other could bring to the table, each other's temperament, and I think we both knew inside that it was going to work out to a very high level. To the level it's working at, I think is not surprising us, but is exceeding our expectations in a positive sense, which is awesome. So for me to take that plunge to do something not independent, but to be an employee was a big deal for me personally, because now I'm taking marching orders from someone else, which is totally cool. But I knew that if it was from his direction, it would work out well. So it's very crucial to identify and land the right spot. And I don't think there's anything wrong with bouncing around, but I didn't want to be someone that was going to go from company A to B to C to D and so on and so forth. I really wanted to sink my teeth into it, because it's very hard to become great if you're kind of bouncing around all the time.
Agreed.
It's also what I hate more than anything else too, is just the process right when you get hired to like the first couple 3 months where you don't really know what you're doing. You're kind of floating. You're wondering if it's going to work out. That feeling of uncertainty to a sense and not really knowing and being able to fly never sat well with me. I didn't like that. I didn't like building that part. So I'm very happy that I'm in a situation where I'm fully integrated and taking on more, responsibilities and taking lead initiative on many important kind of components to the firm, which is awesome, which I'm sure you have that as well.
Yeah. No, it's very similar for me is coming from a marketing background. It was easy for me to step into Skyline Point Capital and take over marketing because I had that background. It was learning the real estate in more depth that took the time, which Steve's an expert at, and so he's such a great teacher in that sense. But I think the same with you is that having the personal connection I had with Steve for over a decade, I already knew who he was as a person. I already knew how he is when things are good and how he is when things are not going so well. And so knowing, similar to your question of how do you find the right partners to invest with, I already knew the upstanding guy he was. I already knew how excellent he was at business and how he treated people and how, when people weren't looking, who was he? And those were all things that he got top marks on, and I've known for a decade. And so it was a really easy conversation decision to say, yeah, this is someone I want to, hook my wagon to and be with for, decades. Like, I'm like you, I don't want to be bouncing around. I don't think you learn and become an expert if you're bouncing around that frequently. And I don't think it does, I don't think it helps our investors either if there's a open, if there's a revolving door of people coming in and out of the group. And so Steve knows it, but I'll be here for a while, as long as you'll
Yeah.
have me. Let's put it that way.
Yeah, that's how I feel as well. I'll be
Yeah,
here. Hopefully, this will be my last job.
yeah,
Don't really have any ambitions or plans to do anything else other than this. This is exactly what I wanted. So it's great to hear that you have that there.
yeah.
Moving on to some other questions I'd like to ask some people on
Sure.
the show pretty consistently is, there's a recession kind of around the corner. One would argue we're in it right now. But, what do you think will do well and do poorly here coming up with this changing economy and restarting of the cycle?
Yeah. Well, again, most of my focus is on Omaha, so I'll speak directly to Omaha. I think that multifamily in Omaha in the Midwest is going to continue to do really well. One of the and I've already said this, but one of the reasons why we love Omaha is it's a steady eddy. It's insulated from big impact. We feel it, but we feel it less so. And so I feel like in Omaha, the things that have tended to work consistently are going to continue to work through the recession. When we had the same sort of effect in '08 and 14 and 20, and multifamily was still doing pretty well. I mean, we weren't seeing mass evictions. We weren't seeing delinquency. And so now you could look at retail and say that might be a little bit more risky here in the Midwest because the first thing to go typically in a recession is people's spending power or their excess cash, and so they're less
Discretionary spending.
Discretionary spending. That's the word I was looking for. They're less likely to go out and eat. They're less likely to go shopping for clothing, at like a boutique. And so you're going to see your neighborhood retail maybe struggle a little more. And so we keep that in mind when we bring investments to the table. When we say, okay, maybe we find something that's got some tenants that are going to be pretty solid during a recession. Like these are things that aren't going to close shop if another COVID happens or another recession. And so for the Midwest, I think though it's going to be your multifamily. It's going to continue to do pretty well. What about you guys?
Yeah, I mean, I think we like anything that's necessity, not luxury. And luxury is likely, unfortunately, a little bit more on the retail side of things. I think office kind of fits that there.
Yeah.
But, I think housing is solid. Self-storage seems to be interesting as well. But the flip side, do you think, it sounds like you think multi is going to do well. Any other kind of other ones like industrial perhaps that you are predicting will do well?
Industrial could do pretty well. That one I think could go either way. I think it will do pretty well, but I'm more confident in the multifamily doing really well in the Midwest if we do come through a recession.
Right. Very good. Well, you've been such a great guest here today. How can people find you, reach out to you, and learn more about you and Steve and Skyline Point Capital?
Yeah, so you can go to skylinepointcapital.com. Everything is there. You can find us or find us on LinkedIn, Steve Nabby, Jake Prieur, and that's the best way to find us.
Awesome. Well, you've been a great guest. I look forward to doing more of these, hopefully one with you and Steve and Rob together. A 4-way podcast.
That'd be great.
Cheers to this deal. Many more to do coming up. And thank you for being such a great guest. To everyone who's been listening today, we appreciate you, and we'll see you next week, hopefully. Peace.